holiday or not, we still do 55 minutes of business on Business Incorporated. Here's what we have prepared for you on this episode of the program. U.S. top 10 buyers of Nigeria's crude in 2024. And Suez Canal's revenue is down over 60% this year. European Union bans Air Tanzania over safety concerns. Welcome to the program. I'm Ini John Mekwa. We'll start from the global space. The metals global space is where we're starting from. Gold edged lower in light trading on Friday and was poised for a weekly gain as investors await cues on the United States economy to anticipate the Federal Reserve's interest rate cut path for 2025, which they have already given us a hint, and the incoming Donald Trump's administration's policy. These are the two things that investors are looking at. I see that spot gold is down 0.2%, 2,639, still in the safe area of 2,600. 0.2% down is what we see for U.S. gold, still around that, $2,649.10 per ounce. Spot silver follows suit at $29.75. And then platinum also red, 0.1%, $936.85. While palladium, everything seems to be in the red, $922.58 per ounce. And U.S. jobless claims fell to a one-month low last week. Data showing indicating a strong labor market and potential pressure on the Fed to maintain interest rates. They've already told us that for 2025 after aggressively cutting that interest rate now. Looking at other metals, we see spot silver is also down 0.2%, $29.75 per ounce. Palladium also, and but they had three of these metals are headed for weekly gains. From there to the oil segment, where oil prices were a little changed on Friday, but were set for weekly rise and optimism on economic stimulus efforts that will prompt recovery in China. China is the world's biggest oil importer. So we see Brent is up 0.31%, $73.49. And then WTI also up 0.4%, $69.90. The World Bank has raised its forecast for China's economic growth in 2024 and 2025, but warns that subdued household and business confidence, along with headwinds in the property sector, would keep weighing it down next year. China also has revised upwards the size of its economy by 2.7%, but said the change would have a little impact on growth this year as policymakers pledge more stimulus to spur expansion next year, 2025. Chinese authorities have agreed to issue a 3 trillion yuan, that's about $411 billion worth of special treasury bonds next year as Beijing ramps up fiscal stimulus to revive a faltering economy. Now, despite fluctuations in the global oil prices and shifting energy policies worldwide, Nigeria's crude oil remained in high demand this year, and that's according to a report by the National Bureau of Statistics. In its recent trade statistics data, the NBS says on the top 10 list, the United States overtook the Netherlands as the biggest buyer of Nigerian crude oil in the first 9 months of 2024. That's between January and September at 3.64 trillion naira. It was followed by France, which purchased 3.34 trillion worth of commodity, while Spain emerged third at 3.02 trillion naira after reducing its reliance on Middle East supplies. Analysts attribute the increased purchase of Nigeria's crude by several Western countries tries to purchase it because of its high quality and low sulfur content, which is an essential characteristic for modern refining processes. And that's why Nigeria is working to increase its production, which will obviously bring more revenue to the country. And Africa loses about $1.6 billion every day to illicit financial flows and profit shifting by multinationals operating on the continent. This is according to the African Development Bank. The chief economist of the multilateral finance institution, Mr. Kevin Urama, who made this known, says that Africa was losing more than it was getting back via foreign direct investment. He recommends that stakeholders should focus on blocking the outflow than chasing inflows, as this is one of the ways to stop the outflow. According to the International Monetary Fund, illicit financial flows refer to the movement of money across borders that is illegal in its sources, such as corruption and smuggling. There's also tax evasion and terror financing. And back in Nigeria, the total turnover in Nigeria's foreign exchange market rose significantly to 23.95 trillion naira. That's about $14.39 billion last month, November. And this is according to latest market monthly reports from the financial market platform FMDQ. The figure marks a 42.69% month-on-month increase when compared with 16.85 trillion naira or $10.08 billion turnover that was recorded in October. Analysts attribute this feat to the improved investor activity and adjustment of the country's foreign exchange rate by monetary authorities, despite the prevailing challenges around currency volatility and liquidity. Further analysis of the report shows that the spot market accounted for majority of the total turnover at 23.95 trillion naira, while the derivatives market's turnover declined sharply by 82.41% month-on-month to 0.81 trillion naira, and that's about $0.49 billion. Now, one of the issues that will be dominating conversations as we head into 2025 is the budget. So medical experts have been reacting to the 2.48 trillion naira health allocation in the 2025 budget. One of them, the chairman of Save a Life Group, Dr. Richard, was a guest on Business Morning today and is recommending that attention is given to personnel welfare and empowerment, and this should be the priority of government.
A doctor is who determines whether a place can be called a hospital or health center. The maximum you can call a huge infrastructure without a doctor is a maternity. In that particular regard, therefore, it becomes imperative for us to know that, yes, all those things we do are essential, but woman capacity, which unfortunately we are not only not paying attention to them, we are losing them. And the doctors leaving the country, all the other health workers likewise, and it's appearing to be normal to us. It's quite a tragedy that is in the making. I put it something very clear that will be able to help us if there be need for supplementary budget. I heard the Honorable Minister for State and Sanako actually pointing out that the money has to do for mobilization or employment of more doctors and other things. And I asked myself a question, where are the doctors that will be employed? On the 15th of October 2024, University of Benin Teaching Hospital actually called for interview for doctors. And do you know that this can be fact-checked because the CMD actually was there and can even be reached? In that department that used to be O&G, that obstetric and gynae, you used to have up to 100 doctors that can even apply. Only 4 doctors came for that interview. There was none, not one, in pediatrics.
Well, that's obviously one area that the government will have to take seriously in 2025. So apart from having the money, which, I mean, for some people, they say it's okay, the allocation is okay, but what is it being used for and how is it being used to actually solve the priority issues in every sector of the country? And talking about sector, let's talk about your sector, the high cost of living, and perhaps how that has changed your taste in recent times, especially in the festive season. So right here in the studio, we have the Chief Executive Officer and Creative Director of Mazino Fashions, Ewo Mazino Ekwani. And as you can imagine, she does her business right here. First of all, I must say, you got the memo. You got the memo, so I mean, there's no cheating anywhere. So how has it been for you operating in the fashion industry locally a whole lot of things has happened this year. High cost of living. People just want to eat. I wonder if they still remember to sew and do clothes and all of that. How's it been for you in the year 2024?
2024 has been interesting and pretty tough. It's been the year that has tested the entrepreneurial spirit the most. There's been so many factors that have been against local production. You're dealing with high inflation rates, like you rightfully said. People are thinking, oh, food first, essentials first, before they're thinking about clothes. Then to even be able to compete is difficult because you have so many other factors against you. The high exchange rates, because your raw materials, a lot of them are imported. So the high exchange rates, inflation, increased electricity tariffs, should I add the high cost of petrol? It's eroded most of our profits. And to remain attractive, we've had to innovate. We've had to mix a whole lot of concepts together. So in as much as we're primarily a bespoke nation, you bring your outfits, it's custom made and everything, a whole lot of fashion business to survive. We've had to, bring the best of fast fashion, the best of slow fashion to be able to adapt, to be able to produce more things at a lower cost, increase operational efficiency, to be able to bring down your costs. Because you cannot transfer all of this cost to the customers. Customers are not even thinking about clothes. They will try to still tell them, you need to wear clothes.
I wear clothes when I'm hungry.
You can't afford to transfer the whole cost to the customers. So, as business to have survived, you've had to be strategic. To say, how can I lower costs? You cannot just transfer all of this, humongous costs to the customers. So we had to adapt, cost reduction, more efficient production processes, avoidance of wastages, maximizing.
Cutting of salaries. Was that part of what you did this year?
It was difficult. We had to maximize the team. We had to downsize. And then we had to look for teams that were, right now it's skills. It's all about skills, capacity building. So right now, small business owners are looking for one person that can effectively carry out about 3 to 4 different jobs at that small scale. And as we grow, we can now, expand the roles. But it's survival first. It's survival. So we have to be real. Looking for, talents that are able to, do multiple things for the business. We go small, medium. Now that micro is like staring us right in the face, and I
hope we don't get that. But there's also the notion that because of, especially what the challenges we've had with FX, a lot of people have been forced to look inwards.
Definitely.
And look at businesses like yours, because people still have to look.
Definitely.
We still have to try and look good. So hasn't that brought in some demand your way?
The beauty about it is, especially Lagos, Nigeria is like the fashion capital of the world. Argue with anybody.
Of the world?
Yes, because the beauty about it is we're highly fashionable people, and our designers are pretty creative. And there's one thing I celebrate the fashion industry for, is that one of our unique selling points is we are creating clothes by Nigerians for Nigerians. So that's always going to be a competitive edge for us, right? Because we have the most beautiful shapes. We're not like the Europeans, we're not like the Americans, we're not like anybody else. We are Africans, we're Nigerians. So that's an edge for us. So definitely with this FX, making foreign goods to be this unattractive, it's pretty expensive. I'm going for someone to get a $20 dress. It seems like nothing. I'll get a $50 dress. But right now, it's a big deal, right? It's a big deal. So definitely there has been a lot of attraction. However, it's all what has helped businesses to be able to maximize this is also to be able to meet up those standards that they're used to and to remove the stigma from made in Nigeria products.
Has it been removed, or is it being removed?
Well, sometimes some things...
Mostly from the mind.
Some things is fast-tracked. Now that there are more limited options, so it's a little fast-tracked. So
you guys are taking advantage of us.
Yeah, so there's more tolerance, support. People just have to adapt. You have to wear pretty clothes.
Yeah, but even while we celebrate, this is made in Nigeria, a lot of times it just seems like the major raw materials is still imported.
It's still imported.
That's still why? How come it seems so difficult for us to make our textiles here? we have cotton, and we were doing it decades before now. So what happened? What's going on?
I think it's an ongoing conversation, and I think this is where the government has a huge role to play, because there's so much investment required to run a textile, the garments, industry. There's so much involved. So the government needs to get involved.
How?
Resuscitate the textile industries. Create, we
do have some funds that the government has created, or maybe they are not being used effectively. Perhaps that's
the word, effectiveness. There are many policies. I'm a recipient of BOI, loans and everything. So there are many, interventions. But we need to get to the grassroots. There are so many gaps. There's a knowledge gap. It's more like, oh, you're hungry. There's food there, and you don't know. And then when you're about to die, or you're like, oh, there was food there all along. So there has to be more done on the part of government to empower. Because if we want to even meet the local demands and be able to also meet international demands, which is huge for us actually, then we need to be supported. One, with raw materials. It's not just the fabrics, even up to trimmings, zippers, buttons, everything is imported. So there might be,
can't do it.
There might be concessions. You can do a transfer of knowledge, to partner with those that have the technical skills to set up those industries there and give them maybe incentives to do knowledge transfer, to empower people to be able to do it. It's always a gradual thing.
Do we lack the knowledge, or is it just the structure?
The structure to make it work. And then you have the supply on one side, and then you have the machinery, the mechanism that makes, churns out the products. That has to also be looked into. We have to have production hubs. And not just production hubs, we have to have the skills. If you go to a regular big garment manufacturing company, you see a lot of machinery that the ordinary garment maker cannot operate. So we have to come to a place where we empower people to ensure that we're able to increase capacity, to be able to meet local demands. Because when you have demand, then you're pushed to supply. And if you have support for supply, then everybody's happy. The government is happy. You have foreign exchange coming in. You have your people wearing, your beautiful made in Nigeria clothes. And I dare say that a whole lot of countries have built their economies using the fashion industry. Why should Nigeria be an exception?
Do we have demands from Nigerians abroad, diaspora?
Definitely. Nothing like a Nigerian-made clothes. And that is the one thing. We need to work on our standards. There may be an initiative like AGOA, African Growth and Opportunities Act 2000 by the American government to increase bilateral trade with the U.S. I went for a conference recently, and I heard some things I've not heard before. I'm like, how come I'm just hearing this today? However, the requirements are not what everybody knows, and it's not so seamless. So we must come to a place where this information is available and businesses are able to grow the capacity. Funds are not everything, I must say. We need funds. We need grants. However, there has to be a marriage between knowledge and capacity. Because you can give money and money evaporates. When we have capacity, we are able to turn, because business is not, but fashion, I always say, is a passion trade. Oh, I love to sew. When I was growing up, I used to dress up my dolls and everything. Oh, I love it. I love to see people look so amazing, That's how I started. I used to have a very unusual shape. I used to fit into most American clothes or US clothes, or UK clothes. So I started making my own clothes when I was working in the bank. I like, and I learned. The learned is history today.
But we always say that, I know what you say, and a lot of people have said it. It's not all about funding.
Yeah.
Perhaps we have the skills.
Yes.
And it's no more about funding. You're asking for information. And a lot of government agencies will tell you information is other. You talked about BOI, for instance. They've been there for years. So many. I've spoken to a lot of people who have, accessed their funds. Yeah. So is it that the people are not intentionally going out there for the information and the opportunities that have been made available for them? Are we waiting to be fed? Do you think that's the problem?
Not necessarily. The opportunities, it's more like we have to be deliberate, both as a people and as a government. I think it's a mutual responsibility, I must say. However, the government, the onus is also on the government. You have put in taxpayers' money to, fund these initiatives. So that amount of energy must also be put to, just like banking, for instance. We have the informal banking sector that, a whole lot of, startups are, going into, right? So the same thing, you have a whole lot below the cadre. So we have to go to the grassroots, and which is why about 3 years ago, I said Tribal Mazino community, because I saw that gap. There has to be a lot of education. Some people don't just know, they just want to survive. And unfortunately, business as it is now goes beyond just having the skill to cut and sew. You must understand what business is about. You must even understand what you're about, what you bring to the market. What's your USP? Where are you in the whole chain of events? How do you access, how do you position for opportunities? How do you even meet your current demands? How do you ensure that you're efficient? How do you ensure that your quality is top notch? How do you manage your human resources? How do you manage your inventory? These are basic skills. How do you even do your pricing? Because why do you think most businesses die? Pricing is not about increasing price. Sometimes you must monitor your costs. You must control your costs. You must adopt, best practices, ethical practices, to ensure that you even attract and retain the best labor, the best skills to help you to be able to drive that competitive advantage. So it's a whole, ecosystem that needs to work together.
Sounds like anybody to survive now, you have to be an elite. We no longer have time for, Nigerian society is not so educated or enlightened. It doesn't sound like anybody can survive that way again.
See, we're in a knowledge economy. Everybody must seek knowledge. We have the social media age now. We're at the age of, we've seen the good that social media has done. We've seen the good that technology has done. So I think the government, it also has to leverage all of these platforms to be able to reach more entrepreneurs, to, generate the good that they desire. They want this effect. They want the fashion in the creative industry has the potential, to boost the Nigerian economy. So they have to be intentional about the support in the way the industry needs it. If the industry is made up of maybe more than 60%, I wouldn't call it, not formally educated people. They need to be real. Most of my tailors can't speak regular English. You have to come down to their level and explain what you want to communicate. It's called communication. And the communication it has to be effective. It has to be effective. You might be doing billboards here, and you have to go to the grassroots and talk to people and change their orientation and help them to believe. And also, one more, incentives are important. Because what will also drive financial and also access to markets, both local and international. If I tell you that, okay, if you produce to these particular standards, preset standards, you have access to ready-made markets. I mean, just not like how you people, give incentive for people to go to school. If you go to school, you get a job, you see the kind of life you have education, the same thing has to happen because we need that industry to bloom, yes.
All right, Mazino, I think you could hold us for a long talk here, but I'm going to break that jinx now. But thank you so much, for bringing the passion that you do to the industry. Chief Executive Officer and Creative Director of Mazino Fashions, Mazino Ekwani, and compliments of the season.
Thank you.
Send my red.
Well noted.
All right, so it's not just about Nigeria. Talking about high cost of living and harsh 2024, Ghana also experienced it. You would remember that this year they had a lot of protests, especially after the government couldn't meet up with paying off the bond with the bond holders, domestic bonds. And so they did a lot of restructuring. I met up with a former Minister of Finance of Ghana to tell us how the year is ending for them.
Economy has some resilient, features. For example, minerals, gold, agriculture, cocoa, and lately some amount of, oil, crude oil and gas have come to complement, this base. But it is a service sector that has expanded rapidly. It is a service sector that has expanded quite rapidly. In fact, the service sector overtook agriculture and manufacturing as the largest sector, of the economy. So the main problem that faces Ghana, today has to do, with the borrowing, without much repayment mechanism, which has led to default, of the public debt. And that has two ramifications, because the external debt, for it to be restructured, required comparability, which meant that the domestic debt should be restructured in a similar way. And so this has been done, and for the first time, Ghanaians felt what it meant, for example, to be a hippie country. Previously, external countries lent to the country, and then they forgive the debt. If you take it that it is their taxpayers who provided those monies, then in other words, their taxpayers, in addition to aid, were now supporting the repayment of loans, which we should have done. This time round, compared to HIPIC, those domestic people who lent to government, particularly government bonds, also had to suffer what we call a haircut. In other words, they also had to forgive part of, the loans that they gave to government. And this hasn't gone now, too well.
What's the status of the restructured debts and the debtors at this time?
Well, the restructuring of loan is actually part of the, understanding for the IMF program. Because I believe that the IMF rep who spoke here at this conference indicated that if a country was defaulting and runs the risk of defaulting on loans with the IMF and the multilaterals have given it, then there was no chance that as a country that, in quotes, has become bankrupt, the fund itself will give monies to it. So that means that one of the prerequisites for the IMF program compared to previous ones was that you have to restructure your loan and show a capacity for repayment, of the loan. And that is what Ghana, I explained, had been going through. It made it difficult, life really difficult, because the default has also resulted in Ghana being shut out of the, global financial markets. So apart from the multilaterals and the bilaterals, you are actually unable to borrow, for your capital projects, infrastructure. And because those are long-term loans, which complement the multilateral loans, what it also means is that you are beginning to depend on the short end of the loan market, treasury bills and banknotes, which are 90 days, 1 year, 2 years, to finance critical infrastructure. The infrastructure would not even have been appraised before the loan falls due, right? So this is creating some difficulty, for the economy.
How would you say all of this is reflecting on the standards of living of the ordinary, average Ghanaians every day?
As government generated less revenue and borrowed heavily, the loan repayments became very costly. And as we know, as economists will say, when the government is borrowing at a heavy cost, because banks and others consider the government to be more reliable after to impose taxes to pay, banks prefer to give the money, to governments, right? The other thing too is that it compounds situations like the lack of rainfall, which makes difficult for local production. So gradually inflation started going up. Interest payments, as government depend on more loans, interest credit available to private sector meant that they also banks have to increase it, because otherwise it's favorable to give to governments. So that also made it expensive to produce, and as that developed, and the government found it difficult for domestic businesses, found it difficult to fill the gap. It meant that you also have to import. So you have all these phenomena coming together. A depreciating exchange rate leading to rapid depreciation of the currency. You have interest rates going up. You have the loan payments, government debt, which meant that its ability to borrow was limited, and therefore not just capital expenditure but social infrastructure which government provides us. Sometimes even wages goes into arrears. So that explains, I'm trying to explain how some of these things which may sound macroeconomic begins to affect, individual citizens.
And now that you've had your election, you have a new president, what's the expectation for 2025?
I think both parties made it clear that there was work to be done in their manifestos. So the elections per se, there's no bring to an end. It may provide some hope in terms of maybe the parties choosing between what they think, citizens choosing between what they think are the best options. But I think generally everybody knows that the problems, persist and exist,
So what do you
which has to be resolved.
2025?
Well, the new government, which is new, to the IMF program, had to inherit, the program. It has to find solutions to some of the problems that we're talking about. And so the various manifestos have come up, with various ways in which these issues are to be resolved. And one would expect that the new government, would meet with the fund, would meet with us, the IMF, was saying at today's workshop, continue to meet with the creditors and the rest, in other words, the lenders, so that there can be a gradual resolution, of the matter so that Ghana can go back to where it was previously.
That was Honorable Seth Tekpa, a former Minister of Finance in Ghana, giving us an overview of their experience in 2024 and some expectations after that election going into the year 2025. Now, let's take a break. When we come back, markets are open today. Anita has intraday numbers right here on Business Incorporated. Stay with us. Welcome back to Business Incorporated on Channels Television. We'll head to the markets now with Anita Edit. Anita, good afternoon.
Yes, good afternoon, Nini. Thank God it's Friday.
Yeah.
Okay, so yes, the markets have resumed. Nigeria stock market as well as the Johannesburg Stock Exchange. They've all resumed. And take a look at the board there.
They're retaining the 102,000.
Exactly. We've retained that. I won't call it a magic number because at some point we'd gotten into 106. And we have just about 2 days left in 2024. And two trading days, yes, to be precise. So, but so far the market is 36.12%. Okay, so let's talk broadly about the stock markets around the African continent. Always, where we start from the Nigeria stock market, 102,336.39. That's the number for the last track about 1 hour ago, and it's still in the green. The Greens have it. It has maintained that rally which is started all the way from last week Friday, and then continuing into the previous two trading sessions before the Christmas break, and now resuming from Christmas break into the green territory and still holding on as we speak. The banks have it, the telco giants, the two telco giants, MTN Nigeria as well as Airtel, they're doing the magic there. And of course the market is moving before the closing bell at 2:30 local time. For the Johannesburg Stock Exchange, 0.41% intraday loss, 84,586.75 for that market index. And for the other two markets on the African continent, we see broadly red pictures there. EGX 30, it has lost that. I mentioned yesterday that it was hanging by a string of that 30,000, so it's 29,957.97 at intraday, down 0.16% at intraday. While the Nairobi Stock Exchange, this is still as at the last trading, which was on Christmas Eve. And the market will be opening later today, but the number which it closed at that Tuesday was 121.77 index points for the Nairobi Stock Exchange All-Share Index. Okay, so now this is a market we hardly mention, particularly on Business Incorporated, but we'll be talking about the unlisted, on what we call the over-the-counter securities market. That's on the NSD OTC exchange, which is almost similar to what you have on the Nigerian Stock Exchange. At some point, we saw that a company which we've always been mentioning, Aradel Holdings, which is recently listed not too long ago on the Nigerian Stock Exchange, was previously on the NSD. But let's talk more about the NSD OTC's market. And we have the managing director and chief executive of that exchange, Mr. Longe Ewakide to tell us more about what all the activities within the market as well as what to expect in 2025. Thank you for joining us, Mr. Longe.
Of the season.
Thank you. Okay, so now let's talk more about all the volume as well as the value on the NSD OTC in 2024. How does this compare? If you want to do that evaluation, how does this compare with the previous year?
So we've had a phenomenal year at NSD. You spoke about Aradel PLC. You have started to see Aradel go, but I think that we've had a very good partnership with Aradel. Aradel was with us for 13 years. And they went through price discovery, volume creation. So this year was phenomenal. So we've done 103 billion this year compared to 38 billion for the whole of last year. So you see that there's been a phenomenal growth of over 176% from last year. Volume, because of the fact that much of what we've done has been higher priced, is lower by about 38%. And then number of transactions, which is also important, is over 127%, 8,500 to 3,700 transactions for the whole of last year.
Okay, so now we've talked about the transactions, but let's also talk about the number of listings and delistings. What were the number of listings and delistings so far for this year?
We've had 3 new listings. We're on the verge of having a 4th one, but I think it will cross over to next year, which is a very exciting offer. I won't bell the cat yet. So let's see what happens in January. Of course, we've traded Aradel to the other exchange, and there's also Fan Milk that decided to go private last week. So those are the 2 delistings we've had. And we've had 3 listings, Capital Hotels, Okitipupa Oil, and Impressive Baccalaureate.
Okay, so now looking into 2025, what are the growth prospects that investors should be looking out for, and what will be driving investors into the NSD OTC markets?
I guess it is all value. I think there's a very interesting part of this program where a lady was speaking about our progress in the creative industry. These are some of the areas that we really need to focus upon, and that's one of the areas we're going to curate intentionally in 2025, the SME market and then the creative and entertainment area. There's also the unusual area of solid minerals. And we've spoken a lot on your shows of tokenization. We are going to explore that avenue to see how we develop the solid minerals industry. But in partnership with the Solid Minerals Development Fund in that direction, and we'll see a lot of exciting things happen in that period. And then we're going to deal with, I would say, on the infrastructure side, we're seeing some companies that actually are prominent in that area work with us to see how we begin to integrate the Nigerian capital market more with the real economy and see how we are able to drive expansion. That will bring a lot of new investors, and I know that investors are simply looking for next year.
Okay, so thank you so much for your time, Mr. Wakide Longe, the Managing Director of NSD OTC Markets, Securities Market Exchange, for your view on our show.
Thank you so much. Thank you.
Okay, so let's move over to the Middle East. It's varied movements at Intraday. Well, this is the only market that is open within the Middle East for intraday trading session. And you can see mixed movement here, varied. Dubai index was up 0.26% at the last track, while the Abu Dhabi index was down 0.17%. For the other 2 markets within the region, we see Saudi Arabia in the green, but just by a flattish movement there for the close of Thursday's trading session, while the Qatari Stock Exchange was down 0.50% for the close of Thursday's trading session, 10,413.41 for that market index And that's it for that market. Okay, so from the Middle East, as usual, our jet flies to the United States, where the stock futures, well, yesterday there was trading on the New York Stock Exchange, and then we also see that the Dow Jones Industrial Average, the S&P 500, as well as the Nasdaq, the stock futures, which was for early Friday before the opening bell, which will be at about 3:30 Nigerian time. They're pointing to a red opening there. But so far, the three major market indexes are in the green week to date, and this is after posting strong back-to-back gains at the start of the holiday shortened week. So that's it for that market. But for more details about how Thursday's trading session on Wall Street, how it ended, let's bring in our Washington correspondent, Maria Bird.
Not continue Santa Claus's windfall from Christmas Eve, as the day after Christmas saw a bit more trouble with two of the major indices, as the Dow Jones was slightly up at 0.07%, but the S&P 500 was down at 0.04%, and the heavy tech Nasdaq was also down at 0.05%. Many investors are a bit concerned this could be a challenge for the close of 2024, as it's projected that we might not see major wins for the U.S. stock market over the next few days before the end of the year. But investors are still watching to see what will happen with some of the economic trends until the closeout of 2024.
That was our Washington correspondent, Mara Bird, giving us details about trading on the U.S. stock market for the close of Thursday's trading session. Finally, let's go to Asia, where we see mostly negative there, but kind of mixed, because we see that first the Nikkei has crossed back into the 40,000 level. Let's just hope that it holds this level into the close of into the close of 2024, because it reached that level after about almost 30 years. So it was up by 1.80%, and this is coming after the countries reported a kind of a drop. The inflation number actually rose to 3% in November, up from 2.6% in October. At the same time, we also see that in South Korea, where we see that political turmoil is still continuing there, because barely 2 weeks after the impeachment of the former president, that was Yoon Suk Yeol was impeached, there's another impeachment which is on the acting president, Han Duck-soo. That's the second head of state in the current month, which is who has been impeached after that short-lived martial law in that country. So that impact has been riveting on the country's currency as well as the country's market index. For the Hang Seng index is also 0.4%. They are tracking, actually the markets were actually tracking the Japanese market, but so far they've not been able to be in the green for the close of Friday's trading session. But for Shanghai, we see it up by 0.6%, and this is because the industrial output, it was up, it dropped by about 7.3%, while the Nifty 50 is in the green, 0.27% for the close of Friday's trading session. The markets have been in a kind of a mixed close in the holiday shortened move.
Yeah, a lot of uncertainty going on there, because I think the festivities is what's topmost on the mind of investors at this
Santa Claus rally, they actually expected, but that should be sometime next week.
We'll see that. Thank you so much, Aniti. Let's head to Berlin now, where after that Christmas break and heading towards the new year, Germany is taking stock, looking at its battered economy. And while there's some optimism that the once powerful economic engine of Europe will navigate out of its crisis, it seems some problems are more stubborn than they hoped for. Lars has the details. Hi, Lars. What are these stubborn problems?
Thanks for having me, Ini. Well, it's got to do with energy again, and that's not a big surprise. Energy prices have been high in Germany for a while now. Obviously, this all started with Russia's invasion and war in Ukraine. Germany, as we've often discussed in the past, used to get almost all of its gas from Russia, and when that supply dried up due to sanctions over the war, Germany found itself without the amount of energy that is needed by much of the country's industry. And while Germany has started importing LNG, and even though the country has been building up its renewable energy sector, prices have remained high. And now here's the news. A new report by one of the top German economic institutes warns that these stubbornly high prices will likely lead some major companies to relocate and move business to other countries with lower energy prices. Now, it's unlikely that steel plants or some other mega users relocate, of course, but there are enough companies in the metal, industrial or chemical sector that have already started moving at least parts of their business, and that is a major concern.
So what can be done to stop this trend?
Well, the word of the week is Wirtschaftswende. They're talking about an economic 180. That's what experts are demanding from a new government as soon as it is in place. And that means for many, the snap elections that are scheduled for late February can't come soon enough. Economists are saying the government has to help the country's industry lower or subsidize energy prices, strengthen the energy infrastructure across Germany. Also, they say more has to happen, of course, in terms of digitalization, and that is, by the way, also tied to the problems that I just mentioned, because aside from steel and chemicals and heavy industry, another sector with a huge demand for electricity is actually the tech sector. IT, server and data centers, they're really expensive to keep up in Germany, and that needs to change too. We're way behind in the digital world, and making it harder to install more servers is certainly hindering Germany's efforts to get out of the current crisis. So we'll have to get to these elections soon and hope that a new government gets on to business fast.
All right. What about the markets? They've been on break, but they're back now.
Well, after 3 days off, you would think there would be a bit of enthusiasm, but no, that's not the case. There's not much going on in markets, and after the weakness we saw going into the Christmas break, there is not much of a rebound either. One bit of news, there's a change in the DAX, the German blue chip index. Covestro, that is a company producing polyurethane and polycarbonate raw materials, of course, so different plastics, and that was once part of Bayer. That company, Covestro, is out of the DAX, and it will be replaced by Fresenius Medical Care. That's a specialist for dialysis equipment. Obviously, that is not a major shakeup, more like a footnote. And so it is today, and not too much exciting news out there. It seems investors are pretty much done with the year.
All right, Lars, thank you so much.
Thank you, Ini.
Now let's come back to our continent, Africa, beginning with Egypt, where the President Abdel Fattah al-Sisi has said that the Suez Canal revenues fell more than 60% year-on-year in 2024 amid regional challenges. According to a statement by the Egyptian Presidency Office, Egypt lost around $7 billion of the canal's revenue this year amid current events in the Red Sea and the Bab al-Mandab Strait region, which negatively impacted the canal's navigation traffic and sustainability of world trade. The Egyptian president has instructed the SCA to continue working on the project of developing the canal, providing the best navigation services, and promoting canal's role as an essential pillar for world trade traffic. Still in Egypt, that country has achieved a historic milestone with the initial public offer of United Bank on the Egyptian exchange, that's the EGX. And this will be the first bank listing in over 25 years and the country's first IPO since 2021. The move is a cornerstone of an International Monetary Fund-backed privatization program aimed at attracting private sector investment and bolstering economic resilience. The IPO aligns with Egypt's broader reform agenda to deepen its capital markets and divest state-owned assets in line with IMF recommendations to promote private sector participation. The overwhelming demand underscores investment confidence in Egypt's economic potential, signaling that the financial sector reforms are positioning the country as a focal point for domestic and international investment, even amid persistent economic challenges. The European Commission has added Air Tanzania to the EU air safety list, banning the airline from operating within European Union airspace. The decision follows the denial of Air Tanzania's third country operator authorization by the European Union Aviation Safety Agency, citing significant safety deficiencies. Air Tanzania joins several African airlines banned from EU airspace, including carriers from Angola, Democratic Republic of Congo, Sudan, and Kenya. Notable names also include Congo Airlines, Sudan Airlines, and Kenya carriers Silverstone Air Services and Skyward Express. The ban reflects the EU's strict approach to aviation safety worldwide. The Zimbabwe Poultry Association says the poultry industry has remained resilient against the impact of El Nino-induced drought this year, with producers meeting the annual national requirement of nearly 100 million day-old chicks. Zimbabwe and other countries in southern Africa had experienced El Nino-induced drought this year, resulting in most crops and pastures being declared a write-off while depleting water resources. The chairman of ZPA, Mr. Solomon Zawe, says despite the El Nino-induced drought, poultry farmers have managed to maintain production levels in line with the national requirements of nearly 100 million day-old broiler chicks per annum. Now let's head to the crypto space and see what color we have this afternoon. And there I see that we have green. That's like an opposite of what we had yesterday. Well, I was not able to induce the color of the board today good enough, I guess. We see Bitcoin recovering, had 1.18%, up 96,281.91. Has seen better days, but has also seen worse days. I guess this is where we are. And it's still a greedy market, but you have to define what greed is for you personally. You don't just see greed and think that it's time to take profit. It depends on when you enter. Let's talk about this more with Sheun Denia, the Chief Executive Officer of Alpha Geek Technologies. Hi, Sheun. Compliments of the season.
Hi, compliments of the season to you too.
Yeah, so these are humble days for Bitcoin. But we hope it will not last for long.
I mean, it's celebrating. During celebrations, people need money. A lot of people like to take profit towards the end of the year when it comes to holidays. So that's why we saw the significant dip, from the 100K region down to the 90K. And of course, there's several businesses that also shutting down for the year. And some businesses like to close their positions for most trades if they are not investing in it for the long term.
And I mean, we see what's that country that's piling up Bitcoin, MicroStrategies also piling up. So one would have expected that with this volume of demand at this time, we will see a better reflection in the numbers.
Yeah, we will. And evidently, even as those other corporations, I mean, of course, let me also mention that BlackRock now holds, the highest number of Bitcoin in the world, over Satoshi Nakamoto's wallet, basically through the Bitcoin ETF. But yeah, I mean, back to what you were saying. When those happen, a lot of them actually buy over the counter. They don't buy on the exchanges. So they are already done buying at the low rates before we then start seeing the market movements. And that's when people then jump in. And if some others also selling significant amounts, a lot of the miners also need to, people, when they are selling, they also sell over the counter. They don't sell directly on the exchanges. So they would have concluded their transactions before they even announce it, and then before the market starts to react. So evidently we see those, and everybody needs, dollars and naira in their pocket. So people would always sell off. But the thing is, for most people, you have to just stick to your own personal investment strategy. If you are buying for the long term, you buy. And if you can wait, there will always be a dip, no matter how little it is, to also buy in.
So how low can we expect this to go? I know general consensus is swearing in of President Trump will lift the market, but how low can we expect it to get before we get that boost again?
So since people have started trading futures, it has also made the market unpredictable. So what it is everybody's expecting January 20th, swearing in of President Trump. A lot of people are going to open long positions. And evidently, for every trade, people are going 50x, 100x. And they'll definitely, the market will need to correct so that a lot of those positions will be closed. And yeah, so I believe generally, everybody should just stick to their investment strategies. It could get as low as maybe 70, 80K regions, but it might not hold because other people will be willing to, buy up all that, any amount of Bitcoin that people are dumping right now. But yeah, I mean, a lot of long positions will need to be closed. So The market makers also need to make money.
Especially, Sean, there's the news that it's only 6% of Bitcoin that is remaining for mining. Only 6%. That means very
but
soon.
It still take a lot of time. We're getting to the part where it becomes digital gold. And the question has always been in the Bitcoin community, what will then happen when all the Bitcoin has been mined? But that's not immediate. But then what will happen is the miners will still be profiting from transaction fees. Transactions will be happening. But when we get to that bridge, we'll definitely cross it. But right now, everybody is holding. Bitcoin signifies not just currency at this point. For countries, for states, for businesses, it also signifies power. So anyone who's able to, we know that definitely that this is the future of money. And anyone who's holding some amount of it or a significant amount of it is holding power. Whether or not it goes with the tenets of the initial founder of Bitcoin, we cannot live to tell. But of course, for it to get mass adoption, as we are seeing now, institutions have to come in, governments need to come in, and they will start to refine it as we go.
Yeah, well, I hope Nigeria doesn't lose out of that power, that's growing at this time. But sure,
I think the secretary, the
Secretary and Exchange, we see him, very friendly.
He's a Bitcoin guy. He
exactly.
did his PhD thesis on, macroeconomic, the impact of Bitcoin on Nigeria.
So we can expect some good days.
They'll be advising the presidency properly.
All right, Sean, thank you so much, and do have a great weekend and enjoy the festivities.
You too. Have a happy new year in advance.
So that's it. It's going to be a great weekend. I know it doesn't even feel like you should go to work on Monday, but guess what? You have to. But it's going to be a restful weekend, a pleasant one. Family and friends gathered together, bonding. It's a rare opportunity. Make the most of it. I'll see you on Monday. God's grace.